get Paul to come over or Kwame?
Yeah. Okay.
No.
Okay.
All right, we'll go ahead with roll call. Jerry Abrahams,
Here.
Alexander Dom, Phil DeFranzo,
Here.
Timothy Hodges, Catherine McKinnon,
Here.
Commissioner Perez, Franklin Perry,
Here.
Sarah Sanders.
Here.
We have a quorum in attendance for the meeting.
Okay. Let's go to our first item, Hazim, the resolution for the next bond sale.
Sure. Good morning, everybody. Happy New Year for those of you who are going to use it till before month end. So for finance, we do have two resolutions we would like the board to consider. And this morning, we'd like to present the first one, which is the 2023 Series A bond resolution. The resolution authorizes CHFA to issue up to 150 million of the Housing Mortgage Finance Program bonds. The sale will allow CHFA to raise up to 150 million of lending proceeds for the first-time homebuyer program. As of January 17, CHFA has an aggregate of net pipeline of about 180 million. CHFA intends to utilize a fixed rate structure and expect the issuance to close around March. Bank of America has been assigned as the running manager for bonds, and any questions regarding the resolution.
You anticipate fixed rate bonds?
Yes, yes. Sarah?
Yes. Can you hear me?
Yes.
Oh, great. I'm sorry, I was talking with our technical people. Where are we now?
So we are seeking questions from committee, if any.
Okay. Come back later. Any questions? May I have a motion?
I'll move.
Second? Roll call vote?
Jerry Abrahams,
Aye.
Philip DeFranzo,
Aye.
Timothy Hodges, Catherine McKinnon,
Aye.
Commissioner Perez,
I would abstain since I missed the conversation because I came a little late.
Franklin Perry,
Aye.
Sarah Sanders.
Aye.
The vote passes with one abstention.
Okay, on to the next item, Hazim, allocation of state carry forward.
Thank you. So last December, the State Bond Commission awarded CHFA $87,646,268 of unused 2022 private activity bond volume cap. To preserve the award, the Internal Revenue Code requires us to file a carry forward application by February 15. We are recommending the approval to carry forward 100% of the award for multifamily. In addition, on December 22nd, the Census Bureau announced the state experienced an increase in population by 20,608 residents. The increase impacted the CHFA 2023 tax exempt volume cap allocation and the 9% low-income housing tax credit calculation, and the 2023 lending plan has been updated accordingly. I'll be happy to answer any question regarding the resolution.
Any questions? May I have a motion?
Move.
I'll second it.
Any further discussion?
I have a quick question.
Yep.
So population went up. So we get a little extra money. What happens if the population goes down? Do we lose money after they give it to us?
Yeah, so it's not, we lose money, we just have less allocation to award.
So what they do is they take it away from future allocations?
Yes.
Okay. Thank you. I mean, it makes sense.
Any other questions? Okay, roll call vote.
Jerry Abrahams,
Aye.
Philip Sfonzo,
Aye.
Timothy Hodges, Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Franklin Perry,
Aye.
Sarah Sanders.
Aye.
Vote passes unanimously.
Thank you. Now we have a series of reports. The first one is from our new auditors for the 2022 audit plan.
Okay. So since CHFA operates on a calendar year basis, every January, and as part of an auditor's due diligence, our auditor is required to present to the Finance Committee and the board the audit plan for the last business cycle. The idea is to ensure the auditor has a good understanding of our business, evaluate the risks, apply the necessary protocols, and respond to any feedback from board members. Based on the plan, the auditor believes it will be able to complete its work and issue its opinion before the April board meeting. With that, I would like to introduce Tom Goldfuss and Lindsay Tesla, the engagement partner at Whittlesey, to go through the 2022 audit plan. So Tom and Lindsay, take it away.
Yes, thank you. And before I start, can everybody hear me? I want to make sure my microphone's working.
Yes.
All right, sounds good. Great. So thank you for the introduction. Glad to be here this morning and thrilled that we were selected as your auditors for this year. Lindsay has the document, and I think she's going to share it with everybody. So Lindsay, I don't know if you can pull that up. Can you share?
It says I can't share if somebody else is sharing.
We have the document here. So
Okay.
can you move the pages?
Oh, sure. There it is. Okay, perfect. So just to reiterate, the purpose of us being here is to perform our requirements, which is to communicate to you, brief summary of the audit plan. We started doing some interim work in December. We're always doing planning work as well internally and getting ready for the audit. So I believe field work starts, the main field work starts pretty soon with a quick turnaround time to be able to deliver you that audit report. I know Allison's working very hard on the financial statements as well, which, our opinion will cover that. So the following you're looking at here is a brief summary of, we have certain expectations of ourselves and of you. And the main thing we want to do is create impact and value from our audit for you. So that means keeping you informed of our process, being available for these meetings, whether it be this meeting at the end, even if it was during the process, we always, make ourselves available to come here. In addition to auditing, we can offer commentary on the business, things in the accounting world that could create an impact on your financial statements. And as we do the audit, anything else we observe either in your business or as it relates to other businesses, to share that information with you. Lindsay, or whoever's controlling, can keep going down on this page, the next page. So with us doing our audit, there are certain expectations of management. The main things that we expect from management are to comply with laws and regulations and to make the financial records, all the information we request, available to us. We certainly have no indication that won't happen. At the end of the audit, we'll ask management to provide us a representation letter that they've done so. If we were aware or came across of any adjustments which were material, we would require management to make those adjustments. Things like commitment to an honest and ethical behavior, both of management and of the board, to set the tone at the top. and ultimately take responsibility and ownership of the organization and the financial statements. Our job, obviously, is to do the audit independently and to follow the professional standards that the audit requires. A little bit lower on this page is our expectations of the Finance and Audit Committee. And I think it's important to go over, you probably already, know this already, but just to reiterate, communicate to us any significant matters that would have an impact on the financial statements, whether that be in a meeting like this or reach out to us independently on your own. A little bit later on in this document, you'll have our contact information here too, which I'll explain a little bit more detail why we provide that. But basically, you have access to us. You have full access to us, to myself and to Lindsay or anyone else on the team or at the firm for that matter, if there's anything you need to share with us or want to communicate in confidence. Provide us with feedback of the scope of the planned and expected audit work. Again, that goes with the dialogue that we hope to have with you and the communication. Very importantly, if there were ever any allegations or known wrongdoing, fraud, illegal activities, anything like that, you'd be required to communicate that with us. And again, if even if there's a suspicion or you have something on your mind you want to communicate with us, that's what we're here. We provide, as an auditor, your auditor provides that value for someone to reach out to and communicate. And finally, on an annual basis, we ask you communicate with us any concerns with any services or anything else you'd like to see, especially in a meeting like this. If there's anything you want to see in the audit going forward, if there's a certain area of concern for you, or you'd like us to dive deeper into certain areas, you can communicate that and certainly take that into consideration when we do our plan. Our plans aren't set in stone. This evolves during the course of an audit. We may change our plan. We may decide to do different procedures along the way based on what we see. So it is flexible in terms of what we do and what we can add to the process. The next page, please. So I mentioned before, I'd give you our contact information. So this is some of the audit team. There's a lot that goes into an audit, but these are the main players of the team. We have myself and the second person on here, Lindsay. We're both here right now. I provided my cell phone number as well. I think that's important to have in case anyone in management or the board needs to reach out. You obviously have email addresses and direct phone lines as well for the firm provided here. So again, during the course of the year or the audit, if something were to come up and you need to, speak to one of us, you have this. So please keep this document handy. As well as, like I said before, we'll talk later about fraud risks and known fraud. Don't expect anything to, number one, to be in existence, but if there were anything, we don't expect anybody to just reach out in this meeting and start talking about it. But we do trust that you have the ability to contact us and that to contact us. So that is a procedure that we do and we document that. So I just want to make sure you are aware there. We don't have any relationships with CHFA that we believe would impair our independence. So we do check. We do check with members of the team and of the firm to make sure they don't have any investments that would impair independence as well. If they did, we would require them to sell such investments or primarily bonds if they held anything there. So we check annually and we communicate, the rules internally and professionally that we have to make sure that that we remain independent, not only as an engagement team, but also as a firm. So the partners are involved with that. Down below here is our audit timing. I mentioned to you, we began interim work, planning, risk assessments. We started that in December. Year-end procedure work, which is referred to as field work, is February 27th. A little bit lower here. Just scroll down a little bit more to the next page. Sorry. The professional standards in which we conduct the audit are governed by our U.S. generally accepted auditing standards as well as government auditing standards. So the two sets of standards that we're following here to do the audit, primarily the government auditing standards are due to state and federal single audits. So a couple of different standards we follow to do that as well. We're responsible for the audit. Like I said, management's responsible for the financial statements. We'll also prepare and submit the federal data collection form that goes with the federal audit and upload the state audit when that's complete as well. And then the lower half of this page, the scope of the audit. I think, Lindsay, you were going to take over at this point, right? So make sure I have my notes correct.
Yes, thanks, Tom.
Okay, so I'll let Lindsay. I think it's important everybody hears from the audit manager as well. Lindsay's going to be Lindsay's the one really in the day to day and going to be working very closely with Allison to conduct the audit as well. So obviously I'll be involved, but Lindsay's really the face of the audit work for the firm.
All right, thanks, Tom. As you mentioned, my name's Lindsay Tessler. I'm the audit manager. I'll go through a little bit of the planned scope of the audit. We use a top-down risk-based approach. As part of our planning procedures, we performed a risk assessment across all the financial statement line items. This allows us to focus our audit effort on some of the higher risk areas. We'll go to the next page, please. We use a materiality threshold to determine the extent of our testing, and we will use the work of others where possible. We perform analytical review procedures over low risk areas, and we focus our substantive testing such as reconciliations and confirmations on the year-end balances. If you could scroll down a little bit. I think this is what Tom was alluding to, fraud risks. It's a big focus point for all audits. We inquire with management, finance and audit committee, and internal audit just about your views on the risks of fraud, knowledge of any actual suspected or alleged fraud, your oversight role and how you respond to fraud risks, if there have been any communications from regulators, third parties, any whistleblower matters. In addition, related party relationships and transactions, whether there are any new ones this year or changes and significant and unusual transactions. I think as Tom mentioned, we don't expect anybody to raise their hand really in this meeting, but as he mentioned, our contact information is within this packet. So please feel free to reach out to us on the side, either after this meeting or obviously if something comes up after this meeting, we're always available. If you want to go to the next page, please. These are critical accounting and auditing areas. We've identified 9, which seems like a lot, but given your size and complexity, it's pretty standard. We're going to focus primarily on the federal and state single audits, the compliance, as well as management override of controls, which goes hand in hand with fraud risk. We look at a sample of journal entries, and we also use analytical software to look for any unusual trends. We'll do a walkthrough of all the relative internal control processes. I'm not really going to go through all 9 of them because I think you guys have the document and I don't want to bore you. So if we want to move, unless anybody has questions, of course, we're open to those. And then if we want to move to the next page, which I believe is the last page, these are just recent accounting pronouncements, GASB statements. There's nothing really concerning here for you guys. We just wanted to put it here as a reference. Again, if anybody has questions, but I think this is pretty much the end of our presentation. So Tom and I will take any questions if you have any.
I'll just add one thing, just because this is our first year. Some of the work we do obviously is to communicate with your prior auditor. So we obviously do that. We look at prior auditor work papers as well. For 2 reasons. One is because the standards really recommend or require us to, but also to gain an understanding of the beginning balances for the year as well. So during this transition, there is communication with us to the prior firm. luckily this isn't I don't believe it's any animosity here. It's a requirement that you rotate firms every so often. So our experience is that usually goes very well, the dialogue between the other firms. So there isn't a true loss of knowledge or continuity there, so to speak. We try to maintain some of that. So we'll look at what they did as well. So for anybody worried about transitioning of first year audits, we do cover that.
Commissioner Perez?
Thank you. First, I want to emphasize, I'm not aware of any issues. I'm not saying there's any fraud. I'm not saying there's any problems. But in the last year or two, because of COVID and several funding that we got from the federal government, we got involved in some new programs. Some of those programs has us dealing with third parties. I was just curious if you guys could look at that, make sure we have proper internal controls or we follow best practices. Namely,
Yeah,
because
that-
at the national level, with some of those programs, there's been issues. And I'm not saying there's been any in this agency or in this state. I'm not aware of any. And I know we have a great internal audit staff, but it'd be nice to have an independent, now that our internal audit staff, it's not independent from the,
Right.
to look at it and make us comfortable. Yeah, you're doing the best you can.
Mm,
From an internal control
Absolutely. And most of those in the material ones, I'm sure will be covered in the federal single audit. But we'll definitely be looking at those programs as well. It's mainly the controls in place, and then using, as Lindley mentioned, using work of others, using internal audit work as well, and looking at that internal audit work that was done. But those will absolutely be covered in what we're looking at.
Well, some of those are very new. And my biggest, not that I have a concern, but my biggest curiosity is with the third-party entities we use, right? Because we use a lot of nonprofits sometimes to help us in order to be able to get it out and, to the people faster. I know we have great internal controls. I'm not so sure,
Right. Yeah, we'll
If
absolutely
we're doing it
make sure
100%, I want to be even mentioning it.
Yeah, we'll absolutely get some coverage on that, and we can reach out at the end and let you know if anything was concerning or how we did in that work.
Well, you can let the whole committee know, because again, I'm not asking this question because I'm aware of any issues.
Okay.
Thank you.
Any other questions for the auditors?
I just said, and I apologize if this is a stupid question, but okay, so there's an audit for GASB, right? For our,
Yes.
our traditional audit, and then you make reference to a federal audit. Who is the consumer of the federal audit? I know we'll get to see it, but what can you just expand on that?
Yeah, so give me 1 second. I'm pulling up your financial statements real quick. So the GASB, when you refer to GASB, it's just like any other most entities you see are FASB. The government, the standard body is set by the FASB. You being a governmental agency or a quasi-governmental agency, don't follow FASB, you follow GASB. So the GASB idea is just who sets the standards. It doesn't relate to the audit. The state and federal single audits, the consumers are the government. So primarily it's the government who issues you the awards or the grants, who fund your programs are the user of our audit of those. So we do a testing of those programs. We look at controls over the programs, and then we test the expenditures and that the money was spent properly for the most part, and then issue an opinion on the compliance, whether or not you complied with all material specs with the compliance requirements. And then we send that to the federal government and the state government.
Right, and when you say federal government, that'd be the IRS.
No, it would be the Office of Management and Budget, the OMB.
Okay, it's HUD or OMB. Okay, that's my question. Thank you.
Yeah, or HUD, or it would be HUD with selected HUD programs as well.
I mean, I would think that there's any issues with our tax credits, the IRS would be interested on it. But I agree with
Sure.
you. In general, it's not the IRS, but they would be interested if you ever find any issues with our handling and management of the tax credits.
Sure, absolutely.
Any other questions for the
As a
auditors?
former IRS agent.
Go ahead.
No, I was just giving additional information why I would say that.
Yeah. I don't know if everyone was aware, but Lindsay and I, our firm has a large banking practice. And Lindsay and I both work in that banking practice. So just nothing else, just to provide a point of reference for everybody of, you know, some of our background as well. I've also worked with a lot of CHFA local housing projects clients as well, so a big practice there too. So I'm kind of split with financial institutions and real estate projects, and Lindsay's probably focused more on banks, and then also the quasi-publics. She's worked on probably half of them of the state at this point. It seems like.
And I can tell you, as a banking commission, I get to read a lot of their audits.
Yeah. Yep.
Because I do read those things, because I like reading those things.
We know you do. We know.
Any other questions for the auditors? Not, let's move on to Allison Murphy for the financial reports.
Good morning. Before you are the December financial reports. I do want to point out that these are preliminary, as we do expect to be making a few more adjustments before we close the books out for the year. On the revenue side, mortgage loan and investment interest revenue are coming in 10.7 million over budget for the year and 9.3 million higher than last year. The current year variance is due in large part to the increase in interest rates on the authority's short-term investments. The state's stiff rate at the end of December was up to a whopping 4.7%. And that same time last year, it was actually less than 1%. On the expense side, bond interest expense is below budget by 4.6 million for the year and 4.9 million lower than prior year. Administrative expenses are coming in 7.7 million under budget and 779,000 higher than last year. When you exclude salaries and benefits, or 27.1 million, the current year expenses are 421,000 lower than last year. Lastly, the change in net position is above target at this point by 22.9 million. Are there any questions?
Any questions for Allison? Not, let's go to delinquency reports with John Chilson.
Good morning. For the month of December, the authority purchased 194 loans totaling $43.5 million, of which 155 loans totaling $33.7 million were securitized, or 80% of production. The remaining 39 loans totaling $9.8 million were whole loans. The average loan size was $224,000 for December. The month-end mortgage-backed security balance was $2.16 billion, which was an increase of $16.7 million over the prior month. The whole loan portfolio through November declined by 32 loans, or $1.9 million, with a total portfolio balance at the end of November at $1.1 billion. The overall delinquency rate declined by 8 basis points, 2.31%. And the carry-on balance for loans in foreclosure year over year decreased by $8.5 million to $22 million, while the number of loans in foreclosure year over year decreased by 59. For the month of December, the authority also funded 191 down payment assistance loans totaling $2.75 million, the average loan size being $14,400. 98.5% of the CHFA December borrowers took advantage of the down payment assistance program in purchasing their home. The authority also funded 197 time to own forgivable loans totaling $6 million with an average loan size of $30,500. On the multifamily side, there were 2 closings in December, which increased the portfolio to 564 loans with a total portfolio balance of $1.34 billion. There were 6 permanent loan delinquencies, 1 construction loan delinquency, and the overall delinquency rate for the portfolio was 1.2%. Any questions?
What was the construction loan delinquency?
What was the construction loan? It's the project name is Cherry Street, which has been discussed at the board level a couple of times.
And what do you consider on the multifamily delinquencies? What do you consider delinquent? Is that over 30 days or over 60 days? What
Over
is,
60.
okay. All right.
Any other questions? Seeing none, let's go on to the investment and swap report. Allison Murphy.
Before you are the quarterly investment and swap reports. The last quarter of the year, we saw an increase in the book value of our investments by approximately $51 million, bringing the portfolio balance up to $3.4 billion. We also experienced an increase in the weighted yield to maturity from 2.77% to 3.49%. The swap portfolio increased by 1 swap from last quarter to a total of 42 swaps with 8 counterparties, bringing the total notional balance up to $947 million. The quarter-over-quarter weighted average pay rate saw a slight decrease to 3.02%. We also continue to see an increase in the market value of our swap portfolio, with this past quarter increasing by $6.8 million to $26.4 million. Are there any questions?
Yeah, I was looking at the detail. I don't know if you could call up the second page of your swap report, and it's just interesting. It was detailed. It shows by provider. Anyway, it shows that, you know, you have a positive swap mark-to-market value on 3 large providers, RBC, Toronto Dominion, and US Bank, where if the swaps were to terminate, they would owe us money, which is, you know, what you were alluding to, the value of our swaps is because rates have gone up.
Right.
It's in the package, but it's not on the screen. But anyway, and I think they total about 40 million. So that's just like an interesting thing to see. But that was at the end of December. I think rates have really come down since then. So maybe for the next quarter, it won't be as large. But I see they're all like strong counterparties, AA, pretty much across the board, which is
They
good.
are. This is practically the first time in the 10 years I've been here that we've seen the portfolio turn to a positive value.
Right.
And that's all due to the interest rates, right?
Because these must have been executed at, you know, the very low rates we had, if you look at the dates and stuff. So
correct.
Anyway, it's just an interesting phenomena. But I see none of them have reached their threshold for collateral. So I believe that's what this is saying.
Correct.
That's correct.
Yeah, but it's an interesting thing that the committee should note. But I think it's going to come down, you know, it's going to come down, I think, again for the next report potentially. But because this is December, right?
Right.
Okay.
Commissioner Perez, you had.
Yeah, I mean, I was not going to say anything, but I can't help myself, right? Because I need to be consistent about swaps. I understand the meaning of it. You did a presentation for us, but I also want to emphasize that even though some of these companies are AA, that's only as good as the next recession. If you don't believe me, see what happened in 2008, where a lot of companies went under because of swaps. There were 2 things that brought most of the companies, including Payne Weber and so forth. There were securitization of mortgages and swaps. And even the biggest one of it all, insurance company, is not the same company today because of the swaps. So, and I'm not saying, I'm not looking to open up a can of worms about swaps in general, but I just don't want to give people false hope.
Yep.
Well, generally, at what level would we expect them to start posting? Typically,
Each contract
is different, yeah.
Yeah, you see it's
like 10, usually typically 10 million about or
50. Once they reach the threshold is 50 million.
That's pretty high. Okay.
Any other questions on investments or swaps? I mean, it is nice to see the treasurer stiff rate up so high now. It's really helping state coffers as well. And all the municipal investors. So it's been just a nice thing to see. Any other questions? Move to our last item, internal audit report from Joyce Kiemke.
Good morning. Before you is an update on the internal audit plan. The first memo in your package discusses the audit activity performed in the second half of 2022. Starting with CHFA audits. In the first part of the year, we completed an audit, as you may recall, of servicing of multifamily loans. So during this period, we continued our focus in multifamily. We completed a review of internal controls over the servicing of escrow accounts for multifamily properties. Management is implementing recommendations to improve the monitoring of ending account balances. We also performed follow-up audits of the underwriting and construction loan advance processes for multifamily housing. Audit results of these reviews concluded that the majority of the recommendations from the original audits had been implemented. Detailed audit reports for these 3 reviews are in the back of your report. Turning now to single-family loan servicers. Homeownership loans are serviced by outside organizations. We perform servicer compliance reviews, which are limited in scope and focus on loan servicers processing and collection functions. During those reviews, we look for compliance with key contract terms and insurer guidelines. During the period, we completed reviews of 2 servicers. We issued review letters of conditions noted during our reviews and reviewed and accepted management's responses. These organizations service about 24% of single-family whole mortgage loans. So in total for the full year, we reviewed 4 servicers that represented about 1/4 of the whole loans and about 1/4 of the DAPs. Switching now to consulting activities. During the period, we worked with finance, portfolio management, to review a servicer's request for authorization to renew their status as a CHFA lender and service new loan originations. Our engagement included providing management with an update on borrowers' escrow account balances maintained by the servicer. The complete servicer review of this servicer will be deferred till 2024. The next document is the audit plan chart. If you can move up, there you go, which summarizes the audit work completed for full year 2022. Moving now to the next memo. It discusses the 2023 internal audit plan. Annually, we review top risks which affect organizations based on audit guidance. We discuss key business priorities, risks, and changes with numerous members of management. We update our risk assessments of audits and servicers, and we review the status of audit recommendations. Based on this analysis, we develop the internal audit plan. We may defer reviews of certain areas if they are undergoing business or technology changes or changes in servicer organizations. The audit plan then becomes a subset of audits from the audit portfolio, a cyclical compliance review of select servicers from the servicer portfolio, as well as planned consulting activities at the request of management. We review then the draft audit plan with management to discuss the audit coverage and how it aligns with the authority's goals and objectives. Throughout the year, we will assess and modify the plan based on possibly changes to business priorities, staffing resources, or servicer availability. So, therefore, based on all this, the 2023 internal audit plan will focus on home ownership or the single family business. We plan to review internal controls over the home buyer mortgage loan origination processes, including FHA loan and home buyer mortgage programs, as well as the CHFA and time to own down payment assistance programs. As time allows, we will then continue our review of internal controls over the pooling of loans, purchase of investments, or purchase of whole loans, And those functions are performed by finance portfolio management. On the multifamily side, we are continuing a review of the LIHTC compliance monitoring performed by outside consultants and monitored by asset management. The 2023 internal audit plan also will include reviews of the authority's loan subservicer and 2 loan servicers, representing approximately 19% of the homeowner first mortgage loan portfolio. The plan also lists a number of consulting activities which are known at this time, which include performing a limited scope review of the My Home CT program, reviewing the documentation of dual processing and reconciliation of the old and new accounting and portfolio management systems after system conversion, and continuing to review and monitor the results of the management assessment and implementation plan for cybersecurity risks, and ensuring that they are incorporated into the 5-year technology strategic plan. Any new consulting activities will be discussed throughout the plan period. And with that, I'd be happy to answer any questions.
Any questions for Joyce? Anything else anyone wants to bring up? Okay, with that, I'd call for a motion to adjourn. All in favor?
Sarah,
Yeah.
minutes?
Sorry about that. I'd like a motion to approve the minutes of the last board meeting of the Finance Committee. Second,
Second.
all in favor? Oh, do a
Aye.
roll call vote?
Oh,
Think we do a roll call vote for minutes?
Don't have to.
Don?
I'm sorry, I had myself on mute. Jerry Abrahams.
Aye.
Phil DeFranco,
aye.
Tim Hodges,
Aye.
Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Franklin Perry,
Yes.
Sarah Sanders.
Abstain, I was not here.
The vote passes with 1 abstention.
Okay, any other matters? Very good. Thank you, everyone, and we'll see you at the board meeting.
Thank
Thank
you.
you.
Okay, bye-bye.
Now.